Chair Janet Yellen also talking about inflation and how raising rates too quickly could strand it below their 2% inflation target. Does this at all change the Fed's rate hike path for next year?
Well, I don't think it does, and it's a good point. And, if you're talking about hitting the 2% inflation, we're going on 64 months and counting. They haven't hit 2% inflation, so it's something to be concerned about. That being said, they've given some examples of why inflation is lower. Pharmaceutical drug prices dropping, telecom prices dropping. We think there's a simpler explanation. Inflation is always and everywhere a lagging indicator. It tells you what happened in the business cycle, not what's going to happen. It usually lags 18 to 24 months. So there was a mid-cycle slowdown, 2015, early 2016, with the oil slick and oil prices dropping. So inflation now is showing that mid-cycle slowdown, and we think it's reaccelerating. We expect it to reaccelerate into next year.
In fact, if you take a look at this chart, 1391, you can see that inflation has been lagging for most of the past 5 years. Do her comments at all raise the stakes for next year's PCE data? Next week's.
we don't think so. So they have to be forward-looking. They have to think of where inflation is going. As Wayne Gretzky talks about sometimes, don't be where the puck is, be where the puck is actually going. So they can't look at inflation data because that is backwards-looking and lagging. Right? If you see wage acceleration, that is increasing. PCE and CPI have both flattened down or starting to raise. Their core model is their belief that as unemployment continues to go down, you're going to have to pay more to get people to work, and that will lead to inflation. They believe in that model. It's called the Phillips curve. That's going to reassert itself, and we're going to see inflation increase next year. So they will be on a path to hike rates 2 to 4 times next year.
You sound awfully sure of that, first of all. What gives you the idea that wage inflation is going to accelerate? You say it's accelerating, but it hasn't really been. It
hasn't really been in aggregate, and that's a great question, a really good point. But when you dig beneath the data and don't look at the averages, at the higher end, wages actually are increasing. I spend a lot of time going out and talking to business owners, and if you speak with them, they're having trouble finding highly qualified, skilled workers, and they are actually increasing wages at a higher rate. We feel that's early now, and that's going to continue through, and it's going to come out next year, so we do expect to do it.
Wait, so you're saying they're increasing the wages for higher skilled workers, and that's going to trickle down, or what? How would that trickle out to the economy?
We think, in general, the inflation prices will continue to rise, and we're seeing it early now because employers are paying higher wages for the higher skilled workers. We do think that will continue to accelerate as the unemployment rate drops. Right now, we're at 4.1%, barely. We do expect it to drop below 4% in the coming quarters, and with that level of lack of slack in the employment market, we do expect wage inflation to increase next year, which I think is going to be a positive for the economy.